to CG Talks with Dreamer Brains. We are back with our next knowledge sharing video on corporate tax law. We have Ms. Bhavna Chopra with whom we'll be discussing the concept of tax group. So, Bhavna, we would like to know what actually tax group and what is the concept of tax group.
So Khushbu, basically, generally speaking, every applicable taxpayer needs to register for corporate tax and also file an annual corporate tax return.
Okay.
However, there is a concept of forming a tax group for group companies wherein one or more taxable person can be treated as a single taxable person under the conditions of Article 40 of the UAE Corporate Tax Law. So what happens is in a tax group, there will be a single tax registration number and also they will be filing a single tax return. But this concept is kind of similar to the UAE VAT groups. However, the conditions of forming a tax group are different in the corporate tax law versus the VAT law.
Okay, so what are the conditions like for forming a tax group?
Okay, so the main conditions are like, only resident persons can form a tax group.
Yes.
So branches of foreign companies cannot join a tax group. And then only resident juridical persons can form a tax group. So natural persons or unincorporated JVs are not allowed to form a tax group. And another condition which is required is that there should be a parent subsidiary relationship between the members of the tax group. And the parent should hold at least 95% of the share capital of the subsidiary and also hold 95% of the voting rights and should also be entitled to 95% of the share of the profits and net assets of the subsidiary. Another thing is that exempt persons cannot form a tax group.
Right.
Also, qualifying free zone persons cannot form a tax group.
Okay.
And the other conditions which are required are that both the parents and subsidiary should follow the same financial year and also prepare the financial statements under the same accounting standards. So these are the conditions of forming a tax group.
So, Mama, how will the threshold of 375,000 dirhams for 0% corporate tax apply to tax groups?
So basically, this limit of 375,000 dirham will apply to the tax group as a whole and not to the individual entities which form part of the tax group. So it will be at the total level, that 375,000 limit.
Okay, and how are these tax group formed?
So they will need to make an application to the tax authority. So both the parent company and the subsidiary company which want to form part of the tax group will need to make an application. And even further, additional subsidiaries which want to join an existing tax group can follow the same process.
Okay, so are there any conditions that business should consider before forming a tax group?
Yeah, so one of the most common advantage of forming a tax group is first of all ease of reporting.
Right.
And also a consolidated income statement which would merge both the profitable and the loss-making operations of the group. And then of course the reduced compliance cost. And further the related party transactions within the group would get eliminated. The cons here could be, then again the individual entity would lose the threshold of that 375,000 dirhams, which is subject to 0% at the entity level. Because in the tax group, you would consider it at the total level. So businesses need to carefully analyze all these pros and cons before making a calculated decisions on whether to form a tax group or not.
And are there any other group relief provisions which are applicable?
So other than forming a tax group, there is a relief provision for qualifying groups for which the conditions are a bit relaxed than forming a tax group. So when the members are part of a qualifying group, they can transfer the assets and liabilities between them at net book value, which would mean that it would be considered as tax neutral. That is, no gain or loss will arise for corporate tax purposes for those transfers. So main condition for a qualifying group is that they should be holding 75% or more in one another, or there could be a third person who would be owning 75% or more in both the entities. The other conditions of not being a free zone person or not being an exempt person also applies to qualifying groups. Again, the same condition of same financial year and then same accounting standards also applies to members of qualifying group. The qualifying group, actually the members will need to have separate tax registration numbers and also be filing the separate tax returns. One more condition which is there for qualifying group is that they need to keep into mind a lock-in period of 2 years from the date of transfer to be able to enjoy the relief of this transfer between qualifying groups.
Okay, so I think today we had an insightful session on tax group. Thank you so much, Bhavna, for this insightful session on tax group. Hope you all had a good time. Have a nice day. Thank you so much.